Hello and welcome back to the channel. Um, in the first part of the Titan analysis, we went really deep into the jewelry business and what are some of the things that are present in the jewelry business, the numbers within the jewelry business. And while doing my research on Titan and predominantly Tanishq, so we'll keep this session to discuss further more into the jewelry segment because I really believe that 90% of the business is driven by jewelry, and that is what Titan really stands for right now. The variables and the other businesses like lenses and those kind of thing and glasses, those are really small. And some of the incumbents like Lenskart are really beginning to challenge Titan on that. So some of the key things that have happened within the business for um, Titan is that they have been very, very aggressive in their expansion plans, but there are a lot of headwinds also that the business is facing. So we discussed about the lab grown diamonds and some of the trends that are being picked up in the lab grown diamond across the world, especially in the USA, and some of the early signs that are emerging out from China, Singapore, and those kind of predominant places. Um, so let's dive right in. I think in terms of the jewelry presence, when we compare March 23 to March 24, all we can decipher is that there's clear sign of very strong expansion. And if you see the notes here, I think within these expansions of 479, so there were YTD addition of 56 further stores in Tanishq, and within this 56, 10 were from GCC, 4 stores were in USA, and 1 store was from Singapore. So Titan really is going global and competing with some of the largest peers across the globe, but it's also facing a lot of headwinds at home as well. What has happened is, if you see here, within 2024, right now the gold prices stands at 72,823 per 10 gram for 24 carat, and back in 2023 it was standing at 61,733 for every 10 gram in terms of rupees for 24 carat. So that thing has happened, and because of which a lot of headwinds are being faced by the company. Um, so that also is having an impact on the margins within the business. Within the balance sheet, we will notice that there is a definite trend in reduction in operating margins, and that can be clearly seen. So here we are seeing clear signs of expansion, but this expansion is coming at a cost. So Tanishq really, how it operates is it operates on gold loans or gold leases, and it has to bear a finance cost of 3%, which it passes on to the consumers. Now, when gold price rises, all the competitors which have gold on the balance sheet will benefit because they bought. So for example, if Kalyan bought gold at 2023 prices, the inventory itself has risen by 15 to 16%. Now Titan, on the other hand, has had to endure the rise in gold prices along with the finance costs, and also to deal with a softer market, a market which is getting flooded with a lot of other regional players, and because of which the volumes also will begin to be a question for Titan. So that is going to be really careful for investors to consider while they are making um, their investments into jewelry companies. So here, if we look at the consolidated statement of profit and loss statements, we clearly see that the addition of new stores and all the initiatives that are being taken by Titan are really paying off in terms of the increase in operating revenue. So if you see the operating revenue and we concentrate on the FI numbers, then it's risen by 22.4 points. But what is interesting to note is the EBIT, which is the earning before interest and tax. There has been a 124 bips downward trend, right? And this is also because of high discounts which are being given. So because of a lot of competition within the industry, to lure consumers to come in. There's been a huge discount offers that are being offered by these jewelry companies, and this is beginning to show in the rise in the top line, but a decline in the bottom line and erosion in the bottom line. And here, if you see, this is earning before interest and tax, and here we have the profit after tax. So this includes all the adjustments related to interest and tax. And here we see that there has been a 111 basis points decline. So clearly, the plan of companies like these to take gold on lease and then fund it through finance, and that is beginning to strike them, because when the gold prices were low or they were going sideways, at that time it was really good for them because their balance sheet was lean and sleek, and they were doing really well. But when you begin to take gold on lease and the gold prices rises, and there's a finance cost associated with it which you're passing on to the consumers, no matter how much you talk about trust and Tata brand and these kind of things, which by the way has also undergone a change. There has been a hallmarking which has come in. So there's been standardization of the way the golds are being marked, because of which there has been a level playing field which has been created in terms of the purity of gold. So when we talk about the new ISOs and the hallmarking and those kind of things which have come in place since 2021, there has been, because of this level playing field, and because Tanishq was really charging for the premium Tata brand and the trust factor and those kind of things, that has really beginning to take a hit, and we can clearly see it within the numbers. So we'll quickly move on to the earnings part as well. And here, if we see, we'll quickly go through the numbers of some of the segments within the business, and we clearly say that jewelry is really doing really well in spite of such a high base of 32,000 crore. It is growing at a 20.2% rate year on year. Emerging business is very small, but the uptick is very good in terms of 28% growth. And when we look at some of the big subsidiaries, so Carrot Lane is something which is now 100% subsidiary, and which was bought totally by Tata. And here we can see the 34% is being the rise. Carrot Lane is one type of business which cannot expand into some of the tier 2 cities because of the premium uh, branding associated with Carrot Lane. So although we can say that the jewelry business or the Tanishq can go into the smaller cities like Indore, Jaipur, and those kind of places, but Carrot Lane really needs to be concentrated within the metro. Also because of the high ticket size, and also because of the premium branding of the segment. So here again, we see that at the consolidated level, the earnings before interest and tax really has taken a hit. It has fallen by 124 basis points, and as I was iterating earlier, that this is because there has been a lot of competition which has risen and leading to a lot of discounts and difference in the way the pricing is done. Earlier, the pricing was done to really um, make the bottom line swell, but right now, because of the high competition, the margins are beginning to take a hit. So we'll quickly look at the balance sheet as well. So So when we look at the balance sheet, so what I was talking about here, you can see the gold on loan part within the balance sheet. Now this is different for Titan and compared to some of its competitors. A lot of its competitors have gold on its book, and they do not want to finance the gold that they are taking to design and then pay it off to the consumer. So really, Titan is really a designing company more than like a gold company which is holding gold. And the peculiar part about the gold business is that there is no dead inventory. Once you have gold on the books, and if gold does keep rising, it keeps shining and it keeps rising, so your inventory really takes goes higher. But definitely you have to make that upfront investment, which is not a good capital strategy. But if we see for Titan, this strategy was working when the gold prices were really sideways, or gold prices from what they had bought was was not rising as much as they are currently. They are literally risen by 16 to 17%, and the impact of this is being really seen on its books and on its margins and those kind of things. So in the coming quarters, let's see where the gold prices go, because this will have an impact on how Titan stands and how Tanishq stands in particular, but also how competitions are really beginning to rise. I was reading the earning call reports, and one of the person who was asking the question to the management really began to talk about how some of the sari companies and companies, sari shops and those kind of companies, they also are beginning to sell gold because they have a reliability factor. They have been selling saris or bangles and those kind of things to a particular segment of segment of customers. They have built the trust, and now they're beginning to get into gold in a small manner. So there is a lot of cluttering effect happening right now in the gold industry. So in terms of the dividend, what we see here is, although the dividend absolute dividend amount is rising, the dividend payout ratio is decreasing. And this would also have to do with the aggressive expansion plan. And to really, I feel there's going to be a lot more consolidation that is going to happen in the industry, and the smaller players are going to get a lot more offers from some of the bigger players like Titan and Tanishq. Because if you really see the dividend ratio, they are not paying that much out to the shareholder as they were earlier, and some of the levels that it had reached 40% as a dividend payout ratio. And this is a very strong indicator as to what the business and what the management is thinking, because from 40%, it's been a sharp downtick towards 27%. We can argue that the numbers itself have doubled, but then again, the prices have also increased. So the dividend yield in a way would have decreased. And this goes on to show that they want to plow back more profits into the expansionary plans rather than give out money to the shareholders. And in terms of the shareholding pattern, we see that 53% is with the promoter, 19% is with the foreign institutional investor. One of them being the government of Singapore is invested into Titan, and it has investments in the range of 1 lakh 20 crore within the Indian equity markets. And within retail, we see 19% is with retail, with close to, we'll just quickly check it out. I think Mr. Rakesh Jhunjhunwala also had some stake within it. So if you see within public, yes. So he has a combined stake, or his better half now has a combined stake of close to 5.3, 5.4%. That's it from my side on the second part of the analysis for Titan. Um, do let me know in the comments below some more of the businesses that you want me to look at, some insights that you want me to look at. Please do let me know what you think of the analysis, and hope you have a lovely day ahead. Thank you.